Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions. And today we have the revision session for the May 2024 part 2. Okay, so this is the part 2 where we are going to discuss the MCQs for the previous 5 sessions of the Finance 360. So let's see that how much you remember, how much you are practicing the current affairs and how much you are revising the current affairs. So let's see that how many questions you are able to answer correctly. Here you can also test that what level of questions can come in the examination, how many questions you are able to answer, how fast you are able to read the questions. So you have to test everything, you have to analyze yourself that how fast you are able to answer, because in the RBI Grade B, in the phase 1, the questions are coming very lengthy. In the phase 2 also, there are multiple statement questions that come. So such questions have been brought for you that are a little complicated, that are also a little lengthy, so that you can get the real example of the questions that can come in the examination. Okay, so this is the revision session that we have after every 5 sessions of the Finance 360, so that you can test your knowledge, you can test your preparation, as well as you get the questions like the examination, right? So good morning everyone, so good to see all of you here. So let's start with the session. But before that, there is a big announcement that we are conducting the mega scholarship test from 25th May 2024 to 26th May 2024. So the test is going to start from 10 a.m. That is going to be till tomorrow 11 p.m. So you can avail this and you can have this mega scholarship test where you will get 40 questions of current affairs. You will get 20 minutes and you have to get minimum 20 marks to avail this scholarship. Okay, so you will qualify for the scholarship if you get 20 marks out of the 40 marks. Okay, out of the 40 questions you answer 20 correctly. So you can see the details in the description box below, as well as here also you can see the details. You can save up to rupees 22,000 if you clear this scholarship test for all of these examinations. Okay, so this is a big scholarship test that you can take, you can check your knowledge, as well as you can also get this beneficial offer. Okay, so all the details are given here that you can see, as well as the details are also given in the description box below, so you can know more about it and just start with this test. Okay, so now let's start with our first question. Good morning everyone, let's start with the first question. So that is here in front of you. The question is regarding the asset reconstruction companies. So we have done the master direction on the asset reconstruction companies in 2 sessions. So try to answer this question. Let's see that how many of you remember about the asset reconstruction companies. Okay, so try to answer this question. Okay, so I have started getting the answer. Let's see that how many of you are able to give the right answer of this question. And as you know that May 2024 or the May is a very important month for the SEBI examination, for the RBI Grade B examination in terms of current affairs. Okay, so I have started getting the answer and everyone is saying D. So let's see that is it correct or not. So regarding the asset reconstruction companies, the Reserve Bank of India has recently released the master direction in which the guidelines are given for the asset reconstruction companies. So ARCs shall, by transferring funds, invest in the security receipts. So ARCs doing the securitization. What is the securitization? What is the asset reconstruction? Everything has been explained in the sessions. So ARCs release the security receipts in which ARCs themselves have to invest a minimum of either 15% of the transferor's investment in the security receipts or 2.5% of the total security receipts that is issued for a particular case. So that is the idea. So here it should not be 5%, it should be 2.5%. Next, ARCs with acquired assets in excess of rupees 500 crores. If the ARCs has acquired the financial asset whose value is rupees 500 crores and more, in that case the ARCs can use part of the funds for part of the funds can be used for reconstruction or restructuring the financial asset. So restructuring of the financial asset can happen by the utilization of the funds that is raised from the qualified buyers through the security receipts if the asset value is excess of rupees 500 crores. So this is also incorrect. ARCs shall retain a credit rating for at least 6 rating cycles of a half year each. If a CRA is changed midway, then ARC has to disclose all the things that have been changed. So here only the third statement seems correct, and that's why here the answer is D. So all the students that have given the answer D, they can give themselves 2 marks, because this is a question that is of the level at par with the phase 2 level, okay. As well as a single statement can come in the phase 1 also, or such question can come even in the phase 1 also. So you can give yourself 2 marks. Now all of this we have discussed, what is securitization, what is restructuring, what happens, and how the ARCs have to invest in their own funds. So this is the part 2 of the ARCs session that I have taken. So this is the idea, okay. Now all of this we had already discussed, that what is the NAV, what is the net asset value, how it is calculated and everything. Now coming to the second question, that is again from the ARC. I hope you will be able to answer this question very easily. Every ARC shall maintain on an ongoing basis a capital adequacy ratio of minimum what percentage of the total risk weighted assets, as well as the second part is that the risk weighted assets shall be calculated on the basis of the on balance sheet and off balance sheet items where all contingent liabilities have the risk weight of what percentage. So here 2 important things are there. What is the CRAR and what is the risk weight of contingent liabilities? So that you have to tell me, okay. So I'm getting the answer. Sorish, Nitya, Padmini, Rohit, Jukta, Sumit, Shalini, Herschel, everyone has given the right answer. So good to see that. So CRAR, for the asset reconstruction companies, the CRAR requirement is 15%, and the contingent liabilities, they have the risk weight of 50%. So here the right answer is C only. That is, the CRAR is the minimum 15%, and the all contingent liabilities, they have the risk weight of 50%. Okay. So this is what you have to remember. Now the next question is again from the ARCs. This is the last question from the ARCs, but this is very, very important. Okay, you have to tell that which are the which of the classification is correct in regards to the NPAs. So substandard assets, the definition is correct or not, doubtful asset, the definition is correct or not, and loss asset, the definition is correct or not. So here try to answer this question, that which of the following is correct, that you have to tell me. I have started getting the answers. So Sorish and Nitya has given the answer. Is it correct? Yes, very good, very good. So substandard asset are the assets, they are the assets that are the NPAs, that are classified NPAs not exceeding 12 months. So if the NPAs are there for less than 12 months, then these are the substandard assets. Okay, so if it is NPA for less than 12 months, so it is a substandard asset. If the NPA is more than 12 months, we can say, that is, if the substandard asset for a period of exceeding 12 months, so now this NPA that was substandard asset, because it has crossed the 12-month mark, so now it has become the doubtful asset. So if the asset remains a substandard asset for a period exceeding 12 months, then it will become the doubtful asset. Now loss asset, if the asset is non-performing for a period exceeding 36 months, then it will be considered loss asset. So if NPA is NPA, if the NPA is remaining NPA for 12 months, you can understand that less than 12 months, so it is a substandard asset. Then if it is becoming if it is remaining substandard asset for 12 months, then it will become the doubtful asset. Then if, so 24 months here, and then for more 12 months more, so that means if the doubtful asset is remaining for 12 months, loss asset if the asset is non-performing asset for a period exceeding 36 months. So that is the whole idea that is there. Okay, so you have to remember the basic idea here, that substandard asset, what is the definition, doubtful asset and loss asset. So here 1 and 2 statements are correct, and that's why A is the right answer here. Okay, so I hope this is clear, that here it was given, the clarification was given, that substandard asset for a period not exceeding 12 months from the date it was classified as NPA. Now doubtful asset, if the substandard asset is there for a period exceeding 12 months, and loss asset period exceeding 36 months for the NPA. Okay, now there are the provisions that have to be kept against the substandard asset, doubtful asset and the loss asset. This also we have discussed in our video. Now coming to the next question, this is regarding the margin requirement for the derivative contracts that we have discussed recently. So try to answer this question. Okay, So here you have to tell the margin posted and collected in India shall be in the form of which of the following. So the margin that is posted and collected in India shall be in the form of which of the following. So I am getting the mixed answer A, D. Some are saying A, some are saying D. So what is the right answer? Let's see that. So Indian currency, that is correct. Any foreign currency, that means even the Pakistani currency, even the Nepali currency, do we allow that also for the margin? No, we do not. So there is only foreign currency, the freely convertible foreign currency such as the dollars, euro, pound sterling, Chinese renminbi and the Japanese yuan. These are the some of the currencies that is freely convertible, or they are the hard currencies that are used worldwide. So not any foreign currency. Here you have to specify that freely convertible foreign currency. Okay, so it is incorrect, the second one. Certificate of deposits, yes, they are allowed. Commercial papers which are assigned a minimum credit rating of A1. Rupee bonds issued by persons resident in India which are listed on a recognized stock exchange in India and assigned a credit rating of AAA. So here the answer should be 1 and 3 only. So here the answer is D. Okay. So all the students that have given the answer A or any other, so that is incorrect. The answer should be D here. Okay. So here you can see freely convertible foreign currency was specified here, not any currency but freely convertible foreign currency, and you have to remember the ratings also. They are important. They have been specified by the RBI in its circular. Okay, understood? Now next, so margin, you all know, we have discussed about the margin, we have discussed about this regulations. Now coming to the next question, that is an easy question for you now, that the margin that is posted, the margin posted and collected outside India can be in the form of debt securities issued by foreign governments with a credit rating of which of the following? And above, issued by the S&P Global Ratings. So what is the answer here? Anyone can tell me? Okay, I am getting the answer D. Is it correct? What about the others? Okay, so Rohit has also given the right answer. Sorish has also given the right answer. It is AA minus. So here, for the margin posted and collected outside India shall be in the form of freely convertible foreign currency, or it can be in the form of debt securities that is issued by the foreign governments that have the credit rating of A minus and above, issued by the S&P Globals or the Fitch ratings, or A3 and above, issued by the Moody's Investor Services. So that is the basic idea. So we have discussed all about this margin requirement and how it can happen, who can do the margin settlement and everything. So we have discussed this. This was the notification, okay, that the authorized dealers may post and collect margin for themselves if the derivative contract is entered with a person outside India, and the authorized dealers can post and collect margin for derivative transactions of their overseas branches or IFC banking units, as well as on behalf of their customers also they can do the posting and the collection of the margin. Okay, so this is the idea. Now the next question is regarding the SEBI. So a very important article we have discussed about the SEBI, that the SEBI has said that there is the certificate that is required for the registration as a alternate investment fund. So which of the following statement is incorrect, that you have to tell me in regards to the certification of registration as an AIF. So try to answer this question. Okay, okay, very good everyone. So it has been made mandatory for at least one person in the team to have the certificate, so that is correct. This requirement is of obtaining certification from the National Institute of Securities Market that have this series, that is also correct. The requirement for at least one key personnel of the key investment team of the manager of AIF to obtain the certification shall be applicable as an eligibility criteria for the AIF. That is also correct. The last one is that the requirement of obtaining the certification needs to be complied with on or before May 9, 2025 for the existing schemes of AIFs that have already got the license, or the license that the schemes of AIFs whose application for launch has been pending with the SEBI as on May 10, 2024. So for them the timeline has been provided for May 9, 2025. For all the other AIFs, they have to get the registration before the eligibility. Okay, so this is the idea. So here the D is the right answer. We have discussed this completely, that this kind of certification is required by the AIF if they want to get registered Okay, if they want the certification to become the alternative investment fund, then they have to get this certificate. If the scheme is already working, then they get the timeline of May 9, 2025. So they get, if the scheme is already existing or they have got the application, if they have applied for the application before May 10, 2024, so they will get the timeline till May 9, 2025. So this certification of AIF managers article, this we have already discussed in our session, as well as we have discussed about the SEBI that has allowed AIFs to place their shares in companies that invest in infrastructure sector. So the next questions are going to come on that. Okay, so as I have told you that the SEBI has allowed for the encumbrances for the investee company for the in the infrastructure sector. So try to answer this question. So the SEBI has allowed for the encumbrances for the investee company in the infrastructure sector. So you know, we have already discussed this. We have already discussed this article. So I hope you will be able to answer this question. Anyone that do not have the information regarding this, or they are giving the SEBI Grade A examination, you should see the session. Okay, it is important for RBI also, for SEBI also, but for SEBI it is more and more important. Okay, so now coming, the answer is C. So let's see, is it correct or not? So you have to tell the incorrect statement here. So category 1 and category 2 AIFs may create encumbrances on equity of investee company which is in the business of development, operation, management of projects in any of the infrastructure subsector that has been mentioned by the central government. So that is correct, absolutely correct. Encumbrances can be created only for the purpose of borrowing by such investee company. So that is also correct. It is only for the borrowing purposes that the encumbrances can be created. The collateral can be created. Okay. In case permissible encumbrances were created by a scheme of category 1 or category 2 AIF without making an explicit disclosure in the PPM. So like there is a key fact statement where the banks have to tell about the loan, about the interest, about the charges. Similarly, there is the PPM where the AIF have to tell all the risk and everything. So if the AIF has created the encumbrances without making the PPM, they have to get the permission from all the investors. They have to tell the investors and get the permission by October 24, 2024. By this date, they have to get the permission. They have to get the permission from all the, they have to get the consent of all the investors. And if the consent is not taken by October 24, 2024, then they have to remove the encumbrances by January 24, 2025. So this is the idea, okay, that if the encumbrances are created as per the scheme, as per the permissible encumbrances are created, but the consent has to be taken, okay. So here only the third statement was wrong. The first and second were correct and you had to tell the incorrect statement. So C is the right answer here. So all the students that have given the C answer, they can give themselves 2 marks, okay. Next, coming to the next question. So here the encumbrances, in case there is any category 1 or category 2 AIF with more than how much percentage of foreign investment or with foreign sponsor or manager or with persons other than resident Indian citizens as external members, they have to follow the master direction of RBI also. So what is the criteria here? What is the percentage here? So yes, the percentage is 50%. So the SEBI has said that the encumbrances can be created by the category 1 and category 2 AIFs, but if the AIF has more than 50% of foreign investment, then they have to follow the RBI guidelines also, okay. Then they have to follow the RBI guidelines also, only in the case if they have more than 50% of foreign investment. So here the right answer is B, okay. So all of this we have discussed, that the duration of encumbrances can be created only till the residual tenure of the scheme, as well as any category 1 and or category 2 AIF with more than 50% of foreign investment with foreign sponsor or manager, they have to ensure the compliance with the RBI master direction also. So this is the basic idea. Now coming to the next question. So we have recently discussed that the HDFC Bank has got a very big loan from an institution of the World Bank Group. So which is this institution? That you have to tell me. Which is this institution? Yes, it is the IFC, that is the International Financial Corporation. So the IFC is the institution of World Bank Group that has financed $500 million to SDFC Bank. So here the answer is E, that we have discussed that the IFC extends this much amount to SDFC Bank to ramp up the microloans to the underserved women borrowers in the India. Okay, so that they can do the income generation activities. So this we have discussed, as well as we have discussed about the TRADES platform also. So this is a question, this is a homework question for you from the TRADES platform. Okay, so you have to give the right answer of this question. Okay, so is it clear everything? Now I want to show you the website of EduTap that we have created, and there is a blog section in the free material that is providing you lots of material if you want to know more about the examination. Okay, so in the blog section you can go and you can search for the relevant information. If you want to know about the exam information, if you want to know about the job profile, even if you want to know about the strategy for any of the examination for, let's say, RBI Grade B. So exam information is provided here. Whatever you want to know about the examination, if you want to know about the strategy regarding any component, so that is also provided. So the team has created very beautiful blogs for you so that you can understand about the examination, you can have the in-depth knowledge about the examination. Even if you want to know about the success stories and what plan they followed, so you can also know about that from here, as well as from where you are going to download the PDF. So at the end of the page here you have the join our Telegram channel. So in the Telegram channel we upload the PDFs within 24 hours. So you will get the PDF from the Telegram channel. Is it clear? So I hope you will join the Telegram channel and you will download the PDF from here. So now in the comment section, do tell me that how many marks you have got. As you know that the May month is important from the examination perspective. So do tell me that out of 20, how many marks you have got. So each question was of 2 marks. So how many marks you have got, so that you have to tell me. Okay. So thank you very much for joining the session. I hope you enjoyed the session. So this is it from my side. Let's meet on Tuesday now with a new topic. So this is it. Thank you very much for joining and see you on Tuesday. Okay. You are most welcome, Samar. You are most welcome, Jukata. So let's meet on Tuesday now. Thank you so much, Sarish, and you are most welcome. You're most welcome, Shalini. Thank you for joining the session. Thank you everyone for joining the session. Now we will meet on Tuesday with a new topic. Okay. Thank you everyone. You're most welcome, Padmini. You are most welcome, Nitya. Do comment down below that how many marks you have got, so that I can also keep track that who is doing good and where you are making the mistakes. So if you have made mistake in any of the question, you can tell that also, so that I can tell you that how you can improve also. Okay. So thank you very much everyone. Thank you for joining.